All right, guys, this is Trader C Brand here on gold and US30. We're going to do the forecast for week 44. As you already know, we've done GU and Euro USD. If you haven't watched the video, I encourage you to go watch it and get ready for the trade for the week 44. Now, we're looking at gold. As you can see, this is the weekly time frame, and gold has almost gotten to a very strong resistance area, which is very important to note that even the push-up that is happening, gold could start dropping any moment, or there could be a possible pullback on gold any moment. So the question is, how many pips is gold going to rise before it gets to that point of rejection? We have about maybe 240 pips, maybe about 240 pips or thereabout before the market will take a turn. That might take this whole week. So this whole week, I could still predict that the market is going to be bullish. Now, why? Because the previous week that just ended is a bullish candle, and we will anticipate that the next candle, which is going to be a bullish candle, that will push a little bit higher before the end of the week, and then before it start rejecting. So that means the first day, second day, third day of gold, trading day of gold could be very bullish for you. So let's look at it on the lower time frame. Okay, now on the lower time frame, if we go to the daily time frame, you can see that there's a lot of consolidation that happened within that zone before the market started dropping. So that's the key area we're anticipating. So if the market could break or come up here and reject, then there's a possible opportunity for the market to sell. And then remember, there's a gap here that needs to be filled. So the market may want to drop massively. And remember, if this happened, then it will also affect every other major pair that we're looking at to trade. So first of all, we don't want to look at that as a conclusion. Let's look at what the market has done on the 4-hour time frame. Now, on the 4-hour time frame, we can see that the market has been very bullish on gold for a while. I mean, come on, the market has done some move to the upside for a while, and it took like maybe let me see, from this low to that low, the market has done an amazing push up for a long time. Amazing push up for a long time. So the market has done it. So what we're seeing now is a shift in the market. Is a shift in the market, a difference. Is a shift in the market, right? So the market has shifted to the upside, and this shift, sorry guys, just a little distraction here. This shift took about the whole month. So a whole long month. Like the whole month, like you can see, October, since from the October 6th, October 4th, we have the whole market pushing up the whole month. So this whole month, the market has pushed up crazily for about 10% up in the market. So we can see that a lot of move happened within this period, which is fair. So what we want to look at now is this market going to keep continuing to the upside? If it's going to keep continuing, remember, we're looking at these areas before the market will start pulling back. So now let's look at the market structure that we have before we start analyzing whether we're going to buy more or sell more. Okay, firstly, we see that this high was taken out. This previous swing high was taken out. Now, this high changed momentum when this low was taken out. So we have the previous low taken out, and then the market shifted direction to this high, and then all of a sudden this one became the current low, and then pushed higher. This one became the current low, and then traded consolidation for a while. Now eventually push higher. So here is where we're looking at that the market shifted the momentum to the upside even more after consolidating for a while. And what we see there is a very strong push to the upside. The market gives us a strong follow through on gold. So now the recent high is now here, but we still anticipate that the market will push higher than that. So this is now the recent low. on the market. So right here is what we're looking at on gold. What should we be expecting on Monday, Tuesday market? Well, two things. The market could pull back a little bit. We want a small pullback when the next candle open. Okay, this is the two candle confirming this push up. So when the next candle open, we should be expecting a buy. Any moment, anytime within that discount or premier level, within the premier or discount level, the market could drop a little bit lower and before going up. So all you need to do is to pay attention, because this is a bullish momentum. It could drop a little bit lower. If it doesn't get to that low, it could get to this low. All right, let me explain something. The market could get to this low, this red zone of the gun box, and then start pushing up. And then all of a sudden, it can just keep going to the upside, like smarting all the way to the upside like that. But if it doesn't do that, then it might come a little bit lower before that push, okay, to the upside in that direction. So is a bullish momentum that you need to watch out for. That's what I'm trying to tell you on gold this Monday, Tuesday. Okay, so again, another area you want to pay attention to is what the market is doing in a 2-hour time frame. Okay, you need to watch it in 2 hours and see how it's going to be pulling back, because it is that pullback section that you need to get your entry on. Now let's assume you're using like a fib to do this. You want price to pull into 38, because immediate pullback is what you're expecting on this. So within the 38.50 worst case scenario, that's where you're looking for a buy. Now it may keep pushing up. If it keep pushing up, then you just have to join the trading lab, because on the trading lab we're going to be doing the daily worked out on gold and see what the market is doing if you trade gold. So we're going to be looking at that. So those are the two pairs. In fact, the pair for the week that we're looking at this week 44, is gold US30, Euro USD, and GBP USD. So you need to see how we're looking at those move in the market. But for now, if it does pull back to the market pull back to 38, 40, 50, that's it. That's your opportunity to target the next move, because you want to be able to catch that move to the upside on 2-hour time frame, where you'll be able to long the market right here. If it pulls back into that level, that's what you're expecting. And then you target that key area. Remember the key area I marked out, which is just in confluence with the 61 minus 61. So you want to be able to catch that 102, 103, depending on the stop loss. You can use 103, which is going to be beautiful on gold if it happens to be that opportunity that we're expecting. So this is exactly what I'm looking at on on gold. On gold at the moment. This is the key area that we should be expecting price action. You want to expect price action in that box, so we'll be able to see what we're expecting to trade more on gold. So this is my take on gold. Let's go to US30. Now, before I go to gold, let me just show you what the fundamentals on gold is like. Now, on fundamentals on gold, you can see, using this my tool, we can see that gold is a neutral right now, but it's still bullish, but it's neutral. What do I mean bullish? Look at that. We have gold on the market sentiment. Gold is looking very, very strong and pushing up. And if you see the retail, gold is 44, which is good. That shows us that the market might still go up, even though it appeared that on the seasonality it was a downtrend. But that's why it's still neutral, but we are still looking at opportunity to buy more of gold to the upside. So that's what I take on that. Now let's go to US30. Now on US30, the market has been dropping crazy, and if you look at the weekly time frame on US30, if we check it, we see that it's already changing momentum by taking out this low and then pull back a little bit, and it's still dropping. So US30 obviously is now selling from buy to sell. It's changing momentum to the downside. So we could anticipate that price on the weekly time frame could eventually want to drop to this low, break out this low. So let's look at that. That's a possible opportunity for us to look at a trade to sell this week 44, to seg to that level. And then before we look for any opportunity for a reversal. What I mean by that is we can see that there is an imbalance here on this market. Okay, right here. So the market may tap into 50 before a pullback, or 61 even, but that's a good opportunity. So that's why you see there's a confluence between where I just marked and the Fibonacci retracement on that level. So I haven't understood that on US30. I'm going to be looking at trading it on the 4-hour time frame, which I normally do. Look at the analysis spectrum. Now on the 4-hour time frame, remember that's our target for the week. So we can see that previously the market created equal high. Okay, created equal high here. Obviously there was a higher high there, but it failed to break. So we still have a high there. But what happened was at this low, which was a current low at that time when this high was there, as you can see, this was a current low at that time. What the market do? The market traded low and then took this low out. When there was a bridge, there was a shift. You see that? There was a shift. And this bridge here, this one shifted to become the new high, which is this one right here. Okay, this became the new high. But what happened again? The market bridge pushed up a little bit and bridged. So if you check why it bridged, check why it bridged. Why did the market sold? First of all, if we were to look at this angle right here, just quickly want to do this. Look at this angle when the market broke that structure. What do we find? We find that, just a minute. We find out that this low was taken out. And guess what? That gives us a confirmation. So first of all, the low was taken out by a wick, and then it closed bearish. So right now, when it now closed bearish, it shows us that the two candle that closes bearish right here is a follow through. That means there is a sell. Okay. There's a sell market right here. So it sold. So because it sold, for us, we're going to expect more sell. So how would you have sold in the market? You expect a pullback because this low was taken out. You expect a pullback into any of the zones. So did the market do pullback? A little bit, but it didn't pull back much. So it dropped again. That's to tell you that the momentum was strong for the sell. So let's see what happened. It dropped massively. So this is where we're at. So now this low has been broken. So here now is that we have a new low, which the market has given to us. And then we have this switch to the downside. But right now, our high has changed. This is not our new high. So the market is giving us a new high structure. So we have this break, this low that was taken out, this bridge of that that section there. So we have that bridge right there, and the candle that bridged it was that. So what's that supposed to be? Well, as you can see, this is a very strong follow through to the downside. The market is still very strong. So that means the bearish momentum is strong to the downside, because as you can see, the candle that broke, that took that low out, strong bearish followed by another strong bearish candle, and it dropped massively. Now, what we're looking at now is a reasonable pullback. Okay. Sorry, a reasonable pullback into this level, this zone, or somewhere else, and then we look for more sell. So we're going to be selling more. Remember, this is our goal, this is our target. We're going to be selling. So the market is looking very, very bearish at the moment. So let's say we are looking at it from the 2-hour time frame, and then be able to see the opportunity for a pullback. So we're looking at this whole region of the swing that he has done. Okay, so we should be looking at a pullback into 60, 38, 50. So this is our zone of interest before we look for more sell. Now, if you push higher than that, there's no problem. If you push into 61, there's no problem if it does. But if you're going to counter buy, be very careful. If you're going to do a counter buy, be very careful. Otherwise, I'll wait for that sell to happen. I know that US30 move in a different way, but you need to understand that sometimes you just have to play safe, wait for a pullback and get in. That's what I'm thinking. So this is the region at which we're looking at potential opportunity to buy or sell. Oh, to sell, not to buy. So we're going to look for potential opportunity at that level and probably targeting this low at the moment because it could get even lower. So we're looking at like a short. Where's my short tool? Come on now. Where we go. So we're looking at a short within that region, possibly any of those regions. All right. And then we're looking at this zone for a proper risk management trade or TP. So your stop loss could be around that level depending on how you trade US30. And then you're looking at a minimum 1 to 2, 1 to 3 stretch. Again, if you stretch target this zone, which is fine, that would be a long-term trade, or it could be like 2-3 days strive if you want to take it that way, like a swing. You want to swing it, that's fine. But for those of you that do day trading, you need to join the trading lab to know the next move for the day, and as we set the analysis out. So this is what I'm looking at on US30. I believe you guys enjoyed it. Let me quickly see if we can get this is US OEM. Let me see, can we get indices? Let's look at indices for a moment. And we're going to look at indices and check. We have US30, SP500, US30 quickly. Okay, this is US30. Neutral. The market is neutral on US30 at the moment. But again, if you look at the COT data, according to what we have, the COT data seems to be going long. So yeah, so we're gonna look for more sales. As you can see that the COT data, they're selling more. There's a lot of short power coming in on the COT data. So then again, based on the retail responsiveness, the retail sentiment also shows that we should be selling. Okay, so that's why we're looking for more opportunity to sell, but wait for it because there could be a massive push up any moment. Though the market is neutral, you have to be careful how you trade US30 as well. All right, guys, thank you so much. I believe you enjoyed this section, and this is it. This is Trader Brian signing out. I'll see you in the daily analysis. For those of you who will be joining us in the trading lab, hope you'll be able to catch the pips. I'll see you there. Bye for now.